Hello, I'm Fawad Razaqzada, StoneX Market Analyst, and today we're looking at key drivers shaping global markets, UK economic data, and what technical signals are telling us about the FTSE's near-term outlook. Donald Trump has extended the pause on higher tariffs on Chinese goods for another 90 days until November 10. This extension gives both sides more time to negotiate and aims to stabilize trade relations between the world's two largest economies. Now, had this truce not been extended, US tariffs on Chinese goods would have jumped to at least 54% today. So this is clearly a relief for markets. Since April, markets worldwide, including the FTSE, have rallied strongly. This is partly due to easing fears around the trade war and central banks gradually cutting interest rates, which has further fueled the rally. Inflation concerns, however, remain. They haven't gone away. Many economists believe Trump's tariffs will eventually be passed on to consumers. If that happens, consumers' purchasing power will be squeezed even more. Meanwhile, central banks might have to keep interest rates higher than they'd like to, which means borrowing costs remaining high. This combination could hit consumer spending hard, ultimately hurting company profits and their share prices. Last week's Bank of England rate cut was a close call. Policymakers were sharply divided, but ultimately agreed to cut rates, though the move was hawkish, meaning that the chance of another cut in November is now lower. Today's data showed average earnings increased by 4.6% in the 3 months to June compared to a year ago, weaker than the 5% rise we saw in the previous month. On the jobs front, employment has now fallen 8 times in the past 9 months. However, the latest drop of 8,000 jobs is the smallest decline so far, suggesting that the labour market may be stabilizing. A weakening jobs market could ease wage inflation pressures and open the door to further rate cuts, but whether this happens at November's meeting remains uncertain. The FTSE remains steady inside a short-term consolidation pattern near its recent record high of 9,191. This consolidation is helping to ease overbought conditions on the short-term indicators, which is generally a bullish sign. The FTSE remains above its main moving averages and has broken through several resistance levels, which means that the path of least resistance is clearly to the upside. Until we see a clear sign of a market top, the strategy remains to look for dip buying opportunities and targeting new highs. Key support levels to watch are 9,130, 9,100 and 9,050. On the upside, resistance comes in at 9,175, then the all-time high of 9,191 will come into focus. Thank you for watching. For more financial content, don't forget to like and subscribe to our channel.